All right, we're live. We're back. Hello, everyone. My name is Sunny Ray. This is the Sunny Ray Show. Today, I'm joined by Steve Walsh. Steve, you're calling in from Boston, correct?
I am. I'm in Boston. Sunny Boston today, 60 degrees.
Sunny Boston. Is that a thing? Do people actually call
It's a
Boston
thing. Well,
sunny
it's a thing
Boston?
today because I'm on with Sunny
Oh,
Ray.
it's a thing. Oh, right. Yeah, every day is a sunny day then. Okay,
Every day's a
so
sunny day when you're talking to Sunny Ray.
yeah, so Steve, I am pumped about this one. Yeah, just your whole everything, the story, the even our past conversations. I just get like a really great vibe. But like I said, let's kick it off. If you can share a sentence or two about the hands-on angel. What is it? What's your mission there? And then, like I said, we'll keep it short now, but we'll come back to it at the end of the interview as well.
Yeah, I mean, at its core, the Hands-On Angel is an ecosystem built around startups. And I'm an operator turned angel investor and entrepreneur. Later on in life, I became an entrepreneur at 46. And the Hands-On Angel really is an ecosystem where I can take my 30 years worth of business experience of building and growing companies and impart that on the next generation of founders. Sometimes I'm helping them raise capital. Sometimes I'm helping them grow their business, making introductions to my massive network, which is global, to help them grow their businesses faster. That's really what it is.
I love that. So, Steve, like I said, let's take it back. You studied political science at UMass Amherst and played college lacrosse. So, what were you like as a kid? Were you always competitive? Tell us a little bit about that.
Yeah, I mean, I was a sports kid growing up. I played almost every sport imaginable: football, basketball, baseball, soccer, lacrosse. I played sports in high school, played golf in high school actually, and took up lacrosse later on in life. And then I played lax at college for 4 years, which was a lot of fun. So it was centered around sports. I had a grandfather who was a professional boxer early on in life. So I think my love of sports for him. He took me to my first baseball game, taught me how to play most of the sports, which was kind of fun. So I was a pretty competitive kid and got into sales early out of college, out of UMass. And I think my competitive juices for sports and teams parlayed into a sales career as a frontline salesperson, and then eventually leading sales teams as a manager, then director, then vice president, and so on. So I had a kind of a normal childhood though. Like I was blue collar kid. My dad was a principal. My mom was a secretary. And, what I always say in our house is we didn't want for anything, but we had to work for everything. That's a line I use a lot to describe my childhood. I had a wonderful childhood. My parents really worked hard to give us a life that they never had, but I had to work for everything, absolutely everything. And I think that really grounded me in who I am today.
So after college in '93, you went straight into sales at Icon. What was that first job like? Did you know right away that sales was your thing?
Well, here's the funny thing. I went into sales because I was originally going to go to law school out of college. And I went to the law schools and most of them said, our average law school students like 24, 25 years old, we'd like to go work for a few years before you go to law school. So I'm like, all right, I'll just go work. And I got a job working at Icon, working for a guy named Herb Chambers, who is an icon in the car industry now. He's a billionaire. He's actually just sold his Chambers Motor Car Group for multi-billions of dollars. And he had started the company, and I like to call it the best job I ever hated, because it really taught me about commodity-based frontline door-to-door sales. Selling copy machines, man, like in downtown Boston was really hard. And I did that for a couple years and had some success really early, which was great. And, I was at 24, 25 years old, getting married, driving a sports car, wearing $500,000 suits, buying Mont Blanc pens. And then it was time to go to college, back to college, to law school. And I went to my father one day and I'm like, I can't go to law school. I'm making too much goddamn money. Like I was just having a lot of success. And I'm like, why do I want to go back to school and take another 100,000 in debt and become a lawyer and work 80 hours a week doing briefs? I'm like, I'm making a fortune right now. Why would I want to do that? So I didn't. And I stopped pursuing the law degree and just leaned into sales. And that's really where stuff just took off for me.
That's super interesting. My first job was at Xerox.
There you go. So this is why we're talking.
But I wasn't selling copier machines. I was working at the XRCC here in Toronto, the research center. So after college, you worked at Metrocall, Windstar,
Yep.
VoiceStream, Wireless, all through
Yeah.
the
I was in the
'90s telecom
wireless,
boom. Yeah.
yeah,
So
telecom
what did you
boom.
what did you learn from that? That wild era.
That a lot of the skill sets I took from the copier industry, I could apply to telecom. Again, commodity based industry, super competitive. It was the wild, wild west, though. It was like pagers became cell phones, and cell phones turned into the broadband space. So I was really early on a lot of those waves, and I was incredibly lucky because I started to see technologies that were really changing the world, which was really awesome. It was a really important time in my life, a lot of fun, and again, I kept growing my career, and I went from frontline sales to leading people to director. And I don't know, the longer I stayed in it, the more I got addicted to it, and trying to build teams. And I went from being a frontline leader to leading people, and from my life being about my own success to helping others with theirs. And I think that there's a lot of correlations to what I did early on in my sales career and leading people and building sales teams to what I do now, which is coaching founders and helping them grow their companies. So there's a lot of similarities there.
So you spent 8 years at Cox Communications, right? Before Comcast. So what pulled you into the broadband world in the first place?
One of my sales reps that worked for me back in my Metrocall days, my early sales leadership days, his brother was a director of sales at Cox and knew my background, knew me because we became friends. And he was looking, it was super early. This is in the early 2000s. So none of the broadband companies, especially the cable companies, had ever been in the B2B space, which was my background. And one day he called me and said, hey, we know each other pretty well. I know you've done success leading teams. I'm getting into the US broadband space, and they don't know anything about sales. They don't know about selling B2B. I think you might be able to help me. And we're going to build, sales teams and comp plans and everything. And it was Sonny. It was like the stupidest interview I've ever seen. It was like, what's the role? You're going to build a sales team. How many people are hired? Well, there's only a couple people hired, but they suck. We're going to have to get rid of them. We're going to have to build a sales team from scratch. I'm like, how much money am I going to make? I don't know. What's the comp plan look like? I don't know. We haven't written it yet. I'm like, okay, this really isn't a really great sales job you're doing on me to come work here. I go, why would I want to do this? He goes, because you and I are the smartest guys in the room. And these people have a ton of money and they don't know this industry, and we do. And if we do this right, we're going to make a fortune. And I'm like, that's the pitch? He's like, that's the pitch. And I literally went home to my wife and said, I think I'm going to go work with Ross. And that was it. And that's how my career started in the US broadband space, which lasted almost 20 years. It was awesome.
That's wild.
Yeah.
So I was going to say, so at Comcast, you were one of the early employees building the business services unit from nothing. So what was that like, being inside something that grew to nearly, $10 billion?
$10 billion. Yeah, it grew from 0 to 10 billion in about 10 years. It was wild. It was like, so let me compare it to startups, because that's where I spend most of my time. Working at Comcast early on, Comcast Business, when it first started, it was like working inside a $100 billion startup. So we had the problems of a startup in that we had nobody hired. I was the third person in the group. Third. We had nobody hired. We had no markets launched. We didn't know where we were going to get our customers. We had no customers. But unlike a startup, I didn't have to worry about making payroll every week, and I had a $100 billion company behind me, so plenty of capital to build. And the first meeting I ever had when I got to Comcast, my boss who hired me, I was vice president for sales. A friend of mine was a vice president of engineering. And so the three of us are in this room, and I'm like, how many markets do we have to launch? He's like, 25 markets in like 2.5, 3 years. I go, okay. How many people how much capital do we have? He goes, unlimited, $100 billion company. You can't spend enough capital for the amount of resources we have. I go, great. How many people have been hired? I said, he's like, in the whole country? I go, yeah. He goes, are we including the three of us in this room? I go, yeah. He goes, 3. And I said, okay, what's the plan? And he stands up and he looks at me and he goes, I don't know. That's why we hired you two freaking guys. And he walks out of the room. And that was it. That was the start.
Okay. So you eventually ran a $500 million business unit with 200 people under you. What did that kind of scale teach you about leadership?
That you can't do it alone. That, like, if you want to scale fast growing businesses, you can't do it as a company of one. You need great people around you. So I realized that if I wanted to build a fast growing business, I had to surround myself with talent. So choosing great talent was extremely important to my success. And in order to grow it to a $500 million business, I needed a lot of the right talent. And I'd always try to find people that thought differently than me, at times would challenge me, brought different skill sets than I did. Because I think that's how you really grow. If you want to build a really big company and a fast growing company, you have to surround yourself with people that are going to challenge you. Like I almost wanted to hire people that were smarter than me that could bring different skill sets. I thought that was really important and a skill I learned early on.
You earned the President's Club distinction at Comcast in 2012. So what does that
Twice.
award? What does that award mean to you looking back on that chapter of your life?
I've been fortunate to win it 3 times, once at Cox and then twice at Comcast. And the thing was at Comcast, I won it in 2 different roles. I won it in a division role, which was managing 5 different regions. And then I also won it at a regional role running a specific region. So I won it in 2 different capacities, doing 2 totally different jobs, which is incredibly hard to do. This was the top 1% of the company. So President's Club was the top 1% of the company. Now, mind you, there's 100,000 employees at the company. So this is the best of the best, the elite of the elite. And the trip was world-class. My good friend to this day, Terry Connell, was responsible for running the trip. And it was just 5-star all the way. Your spouse or significant other got to come with you. And it was limousines and 5-star resorts. And it was something that once you won it, you never wanted to not win it. So I was so fortunate in my 10 years there, I was able to win it twice, which was pretty special. It was a once in a lifetime type experience. And in my case, twice in a lifetime.
In 2018, at the age of 46, you burned out. You've said that it wasn't fun anymore. Can you take us inside that moment? Like, what was the breaking point?
Yeah, it's what I like to say is 3 of us, unlimited capital, no customers, no revenue, a lot of fun, feels like a startup. 10 years later, 10 billion in revenue, a couple 100,000 customers, 200 people working for me. I'm like, you know what it felt like, Sonny? It felt like a bank. All you were doing was moving zeros and ones. How much can we grow? How can we squeeze $1 more of margin out of this one customer? And I was managing P&Ls mostly. I wasn't managing people anymore. I wasn't managing growth. I was managing P&L. And that's not me. That's not where I wanted to spend my time. And I had an opportunity to exit the business and get a package. And I was just like, sure, I'm in. I had been in the industry 20 years at that point. And I was just like, yeah, kind of bad. I did it once at Cox. We built it into $1 billion. And then I went to Comcast. We built it into 10 billion. So at some point you're like, okay, did it twice, kind of fun. Maybe it's time to do something else. And I had zero idea what it would look like. But I knew I didn't want to do that anymore. I knew that I had just had enough. And when I went home to my wife and told her I was taking the package, and she's like, what's next? And I'm like, I have no fucking idea. I'm going to go to California, hang out with my brother for 2 weeks and rage like I'm an 18-year-old. And then I'm going to take my family to Aruba for a week, and we're going to sit on a beach and relax. And then I'm going to come back and figure it out. And that's honestly what I did. I
love it. I love it. So, most people in your position would have just taken some sort of cushy VP gig somewhere. Yeah. What made you say no to that path?
I had no interest. I had spent a lot of time, and look, I got to a vice president level in a top Fortune 50 company, Fortune 10 company, which doesn't happen often. And I had an awesome life. I made a truckload of money. I could get access to every sporting ticket in the world. I went to the Super Bowl, the Masters. There was not right, but my time wasn't my own. Even at a VP level in this company, I had an assistant, my friend Jen, who's still a good friend of mine to this day. She literally, her job all day was to take me from meeting to meeting, because I'd have 10 to 15 meetings a day. And she'd come into my office at like 11 and say, oh, I starred the 200 emails that are important that we have to respond to today for you, so you see them, and your wife wants to make sure you eat today. Like it was literally, it felt like that, because my life wasn't my own. My life was just about the business and running this business. And I just decided I just didn't want that anymore. I wanted a life of intention. I wanted my life to be about what I wanted to work on and not what others wanted me to work on. Stupid stuff like, I didn't want to go to the office at 7 o'clock in the morning anymore. I wanted to go at 10. And I wanted to go to the gym for 2 hours a day to start my day. And I wanted to be at every one of my kids' soccer games or lacrosse games. Like, I didn't want anybody else dictating my schedule anymore. And I knew if I worked for somebody else, then that's exactly what was going to happen. I didn't want to wear a tie anymore. Like I haven't worn I haven't worn a tie outside of 2 weddings I've gone to, which were black tie. I haven't worn a tie in 9 years. I just don't own them anymore. Threw out all my suits. Didn't want someone telling me what to wear, how to act. This is about as dressed up as you'll ever see me now. And it was really intentional.
You started exploring alternative assets like wine and art before landing on angel investing. So what was it about startups that pulled you in?
So it was in 2018, I started to lean into alternative assets, and I started with stuff that was common, like I understood. So I love great wine. So does my wife. And I'm like, well, I got plenty of stocks in real estate. What else can I invest in? And I'm like, well, you know something? Wine actually has really good returns and doesn't behave like stocks, which is good. I wanted something that was very behave very differently. So I started buying wine futures. Then I was like, well, I like art. Oh, art doesn't behave like stocks either and is non-correlated to the Dow. So I'll start buying fractional shares in art through things like Masterworks. And then in 2017, I think you and I talked about this last time, I read the Satoshi white paper and I learned about Bitcoin, and it really changed the way I thought about money, decentralized finance, cross-border payments, and governments controlling money. And I went down I got, orange peeled, and I went down the rabbit hole, and I started buying Bitcoin, and I started studying Bitcoin and buying it, not as I'm going to stake it, I'm going to trade it, just as an investment. To me, it was digital gold. Like to this day, I have the same thesis today that I had on Bitcoin in 2017 when I read the white paper. It's digital gold. It is borderless. No government controls it. You can store it. It has a store of value. It's a long-term hedge against inflation. All of those things hold for me today that held in 2017. And I just got into the cycle of buying it every Friday. And I've been buying it every Friday since. And now that led me to startups, because now that I got sort of I like this alternative investment thing. Well, what else can I invest in? Well, I know how to build businesses. I understand sales teams. I understand how to run operations. And I have capital, and I have access to capital because friends of mine ran venture funds and syndicates. And so I'm like, why don't I go help startups? This just makes all the sense in the world. Why don't I just take all this 25 years of experience and go apply it to the next generation of founders? And that's when I started attending demo days for Techstars and Y Combinator. And I literally would just go, Sonny, and say, Sonny, I'm this thing called an angel investor. Do you need, I have like this pile of money, and I have this really big network over here. Do you need either of these? Because I could make some introductions and give you some money. And that's where it started.
That's awesome.
Yeah.
So you've talked about showing up to demo days, telling founders you had capital and network, right? So what kept you going during that time, right? I'm sure people looked at you like you were crazy. I mean, you were coming from kind of the corporate world. How did you start, winning people over?
That's a really good question. I think it was because honestly, Sonny, I took a different approach that everybody else takes. Like the big problem, let me put it this way. The big problem I saw at demo days was that everybody was about, how can I get a piece of this company? How can I get leverage from the founder? How can I get an advisory agreement? How can I get, on their board? And this is like when these companies was super early. I took the opposite approach. I was like, how can I just be helpful? Like besides my check, and I get that the founder wanted to raise money, but what else can I bring to the table? I'm like, well, I have this incredibly big network over here that I spent 25 years building, and I've got 25,000 followers on LinkedIn. I've got thousands of followers on TikTok and Instagram and X. I'm like, why don't I just find out what these founders need and just make introductions to help them? So I would just go to the founder and go, Sonny, I know you need money, but like there's like 50 things that have to go well for this business to work. Where else do you need help? And they're like, oh, do you know any lawyers? We have to make a Delaware Corp. We don't know any lawyers. I'm like, yeah, okay, here's 3 of them. Yeah, do you know a bank that will bank a startup? Because we went to our Bank of America and they won't bank our startup. And I'd make introductions to a few of my friends that were bankers. And I just found myself connecting founders that needed help and resources to people in my network that could help them do that. Sometimes it was capital. Sometimes it was service providers. But every time I would meet them, I would just ask this question: where are you struggling and how can I help? And by asking that question over and over again, they would answer it. And then I would literally just connect the dots to people in my network that could help them. And because I was taking that approach, I really started to stand out from everybody else at demo days, because I wasn't the guy asking, what can you give me? I was the person asking, what can I give you? And what can my network provide you? So that's really how it happened.
That's really interesting. So you say you've learned more from failures than successes. So can you share a specific failure early in your angel journey that shaped how you invest today?
Yeah. So early in my journey, I was investing early in my angel investment journey. I was investing a lot alongside other people that had been doing it longer than I was, and it had a lot of success. People like Jason Calacanis, who runs Launch and runs the All In podcast. This is pre All In podcast. This is pre when he had written 5 books, and but I was investing alongside some folks that had done it before, and which was great. It's a great way to learn, especially on the deal side. But what I realized pretty quickly is drafting off of others is a great way to get deal flow, but it's not necessarily where I should be spending my time, because I invested in a couple early companies. I'll use an example. I invested in this company called Steezy, which is a dance app that helps teach hip hop dancing to like Gen Z and Gen X. Great. Couple problems. One, it's consumer. I'm a B2B guy. I don't know a ton about consumer. 2, it's about dancing. I suck at dancing. I'm not really good at dancing. And 3, it's about a generation that I'm not part of. So I'm like, what am I doing investing in this company? And I had done that a lot early in my journey. And what happens is over time, my thesis narrowed. And I'm like, well, wait a minute. If I'm great at B2B and I'm great at SaaS and I know AI and all these certain, and I know sports and I know ed tech and I know health tech, why don't I just lean into stuff that I know and I'm good at? So the longer I did it, the more I niched down. So my mistake early on was saying, well, just because these successful angels over here are investing, I should just draft off of them. That probably wasn't the best strategy. And so what's happened is it's taught me over time, niche down to level up. Same thing I tell my founders. As I started to niche down my angel investing and get more narrow in my focus, I made better investments. I was super helpful to the founders because it was something I knew about. And I just think I'm happier in the way I'm investing now, because every time I make an investment, I know exactly what I'm getting into, and more importantly, how I can help that founder.
So I guess your thesis was quite simple and straightforward, right? So take your operator experience,
Oh, yeah.
your investment habit, and your network, combine them to help founders, right? So when did you know that this thesis was actually working?
I knew the thesis was working about how I help founders when founders that I was helping, investing in, or raising money for were referring me to other founders at a rapid pace. That's when I knew it was working. Like they literally would call me and go, because what happens, Sonny, and you're a founder. As soon as a founder raises a round, all their founder friends have one question for them. How'd you do it? And what I found these founders saying was, oh, we have this like secret weapon. This guy, Steve, he's known as the hands-on angel. And he helped us raise our round, put his own money in and brought a bunch of friends. And next thing you know, $500,000 was here. And they're like, can we meet him? And of course the founder's like, sure. So I get pings from founders, text, emails, calls going, Steve, I have a founder friend. He looks just like me. He's in the B2B space. He's grown really fast, and he wants to raise a round. Can you help him? That's how it happened. So founders, what happened, I knew it was working when the velocity of founders I was helping and the velocity of those founders making email or text introductions to other founders just started to increase. And I was getting pings every week from founders going, Steve, we have a dope founder. My friend Sonny's awesome. He's got a dope company. Is there any way you talk to him and help him like you helped me raise my round? And who's not going to take that call? And then after I would do all that, I'd go to my wife and go, yeah, I got like a ton of these founders pinging me. Is this what I do? Should I lean into this? And that's how it happened. And that's how the entire Hands-On Angel brand was born. That's where I started. And that's when I knew it was working, is when you're sitting back and people are literally making introductions to you on a daily basis going, this is Steve. He's awesome. He helps founders. He said he'd take a call with you. I'm like, okay, this is fun. Something's working. That's how I knew.
I love that. So you call yourself a contrarian investor. What does that mean to you? What do you see that other investors miss?
Well, when I say I'm a contrarian investor, I don't think it's like I see everything everyone else doesn't. What I say, Sonny, is the reason it works for me, and more importantly, it works for my founders. I tell them everything nobody else tells them. For example, I have, and I didn't coin this phrase, Gary Vaynerchuk says it a lot, kind candor. I provide founders a ton of kind candor. I don't tell them their pitch deck's good when it sucks. I don't tell them they're ready to raise when they're not ready. I don't tell them they're good when they're just not. I tell them the opposite. I tell them the truth. And it's not because I want to hurt anybody's feelings, and it's not because they're not good people. I actually tell them that because it's what they deserve, because I want them to go faster. And I think when an investor sits back and says, well, it's not my position to tell them their pitch deck sucks. It's not my position to tell them they shouldn't be raising. It absolutely is. Because we as investors complain all the time that the founder's not good enough. They're too early for us. Boy, they don't have the right KPIs. Well, hey, how about you tell them what the hell the KPIs are and you be honest with them, and they might be better when they come to us. So I do the opposite of everybody else. I'm overly candid in a kind way, and I tell them the things that I see that they're not doing well so they can do it better. That's why I'm contrarian. And the funny thing is, Sonny, when I started doing that, it was like I invented fire. Founders were like, nobody's ever talked to me like this. I go, because everybody else is full of shit. And they won't tell you the truth because they don't want to miss a deal and they don't want to offend anybody. I'm like, I'm not doing either of that. I don't miss any deals and I'm not offending people. I'm actually helping them. And when I started doing that, people were like, you're like this contrarian investor. And that's where it came from.
So Hands-On Angel has now helped founders raise over $1.4 billion collectively.
Sure.
For 65 plus companies, 7 exits. When you look at that number, does it feel real?
So I'm up to 69 companies. I've made a couple new investments and I'm up to 11 exits now. I had my 11th exit last week. Wow. Does it feel real? No. Sometimes it feels like I'm living in someone else's body, which, is fun. I don't measure, but here's the thing. I don't measure the success on the dollar amount, how many billions raised. I measure success on the amount of help I've provided founders. I do. I measure that. Money's great. And I get it. I'm an investor. I'm a capitalist. I'm investing capital of my own family to eventually make a return. And returns are great. And I want great returns for me and the founder. But I really just want great outcomes for the founder. Nothing is better than I had an exit a month ago. It was my first angel investment I ever made 9 years ago. The founder has updated me every single month for 9 years, writes an awesome investor update, and got bought by a publicly traded company called Rover. And this founder sent out such a great email about the acquisition. And I was just like, all I could say to her was, I'm so happy for you. I'm happy for your team. I love how you've run this company. I've loved your communication over the years. And all she kept coming back to me with was, I can't tell you how much I appreciate you being on the cap table, how helpful you've been, all the introductions you've made all the years, the support you gave me through COVID when the business should have shut down 3 times. It's just been awesome. And so I was just so happy for her. And I got a nice exit. I mean, it was like a 300% return. So I was loving life. But I was more happy for the founder because she got what she wanted, which was a great outcome for her, her employees, her customers, and ultimately her investors.
You say that revenue solves everything and you won't invest unless there are paying customers.
Yep.
Why is that your hard line?
It sounds hard to say revenue solves everything, but it just does. Like for me, and the reason I wait for that, Sonny, is there's a gap. So if let's say this is my earbuds case. Let's say 2 companies are building earbuds cases, and they both have a product and it's in the market. But this one just launched it. They have no customers, no revenue, so there's no metrics, there's no KPIs. But this one over here has the same product, but they've sold 10,000 units. They have 20,000 a month in revenue, and it's doubling month over month. Well, this product's just more attractive. Even though it might not be a better product, I have proof point that says someone cares about this product. Someone's buying this product. And what happens is that gap between someone that can launch a product versus someone that can monetize, the gap's actually larger and farther away than people think it is. I've seen a ton of people that can launch a product and never get to revenue because they can't close the gap. They can't close a deal. They don't have the right value proposition. They don't have the right call to action for their customers to buy. And because of that, they never get to revenue. So by waiting, and it's not like years, it could be weeks or months. By waiting a couple of months to get that signaling, that validation, I de-risk my investment, because investing in early stage companies is all about risk. And by waiting that little period till they monetize, I have just de-risked my investment substantially because of their ability to monetize. It's signaling, and that's really what investors look for.
Tell me about Fitbod. You discovered it as a user, before AI was even a buzzword. So what made that investment special?
Couple things. I made a decision. I made this investment maybe eight years ago when I really started to lean into my health. And Fitbod was one of those companies. Like, I knew I needed to be in the gym more, but I also didn't want to hire a personal trainer. Like, I don't want someone standing next to me with a clipboard going, 5 more, 10 more, you can do it. I don't need Tony Robbins in the gym. Like, my head will want to explode. But I knew I needed structure, and I'm a data guy and I love structure. So what Fitbod allowed me to do, and I was a user before I was an investor, which is great. Like, when you use the product, I love living it. And this is before AI, and I would log my workouts, but then it would use AI to understand the impact on my body, how tired my muscles were, and what workout I should do tomorrow based on how tired certain muscle groups were. Like, for example, I did shoulders today. Well, tomorrow it knows it should stay away from my upper body, so it's going to recommend I do legs, but it's logged all my prior workouts, so it knows not only what I lifted, how many reps, what I should do to increase my weight, and I put in my goals of what I'm trying to do, and then it adjusts the weights and the reps and the sets accordingly. And it's like having a trainer, but it's an app on my phone. And it was reasonably priced. I got in the only round they've ever raised to date. I did it alongside Jason Calacanis. It was one of my early investments, but this time it was an investment that I really knew and loved and used. And the company has since grown exponentially. I think I looked at their latest quarterlies, 300,000 users. I think they're going to do $25 million in revenue this year, and they're spinning off a shit ton of cash. I love the founder. He's an awesome guy. I mean, my big thing is, I don't know if they're going to be an exit or not, because I think they spin off so cash. I think the founders are having a blast running it, and they're not on the hamster wheel of having to raise funds. So I think it might be a longer path to an exit than I originally thought, because they don't have that pressure of getting on that fundraising hamster wheel, because the growth is funding all their growth right now. Like, they don't have a capital issue at all.
That sounds like a great place to be for them.
It's fantastic. And I love the product, and the product keeps iterating. And my life is, and I use the product every day. I've been a customer of theirs for 8 years. I have no plans on stopping. And it's cheap. It's $200 a year. Like, I have a trainer in my pocket for $200 a year. It's awesome. And that's nobody wild. Yelling at me. Like, I don't have to listen to anybody. It's perfect. It's perfect for a person like me that doesn't like to listen to a lot of people.
So Steve, I mean, I had a bunch more questions. I'm gonna maybe save some of them for part 2 if you're ever open to coming back. But before we close this one out, 5 years from now, what does Steve Walsh's world look like? Are you still in the trenches, with founders, or does the vision change from here?
I mean, when I think about 5 years from now, I think I'd like to be doing what I'm doing at scale a little more. I think right now, a lot of what I do is not scalable. It's one-on-one conversations like this. It's Zooms. It's in-person meetings. I'm trying to productize a lot more of what I do through courses. So I built a course that helps founders learn how to fundraise in an asynchronous way so they can self-pace and learn how to do that. So I did that. I'm doing more live streams just like we're doing here. So I'm doing live streaming 4 and 5 times a week now across different platforms like TikTok. So that lets me reach thousands of people a week as opposed to 10 or 20 people a week doing individual meetings. And I'm building tech because I'm a tech person. So I'm building tech that helps me productize more of what I do, so I can go from helping a few hundred founders a year to a few thousand founders a year at scale. And I want to continue to do it on my terms. We're going to be empty nesters this year. My youngest is going to college, so we're going to travel a lot more. And the benefit for what I do is I can do it anywhere in the world with a laptop, a Zoom account, and a cell phone. And my wife works remote too. So I think the next 5 years is more about simplicity of my life, traveling and experiences, and figuring out how to help founders at scale. Those are probably the 3 goals for the next 5 years of my life.
I love it. Steve, where do people learn more about, I don't know if they want to get in sync with your train of thought?
Yeah.
Are you posting things on LinkedIn? Maybe tell them also about your website for Hands-On Angel.
Yeah, so best place to reach me, handsonangel.com. And everything I do is the Hands-On Angel. On LinkedIn, Hands-On Angel. On TikTok, Hands-On Angel. On Instagram, Hands-On Angel. So it's pretty consistent of where to find me. I post about 35 to 40 times a week across a lot of the platforms. I post across LinkedIn, X, Instagram, and TikTok every single day, 5 days a week. I don't post on the weekends. And I do lives on TikTok probably 4 to 5 times a week. So if you put in Hands-On Angel on any of those platforms, you're pretty likely to find me.
Amazing. Amazing. Well, Steve, thank you. You've been so kind and gracious with your time, sharing all this wisdom. I feel like we're brothers from different mothers at one point with the Bitcoin story you were telling, and just being so passionate about helping, fellow entrepreneurs. So good on you. I see we have about 20 people listening to us live. So that's always a delight. Thank you all for tuning in, and for everybody else that sees this, in the future. Until next time, take care.
Thank you, my friend.
Steve, hang back for a minute. I'm just going to bring this live stream to an end.
Sure.